PayPal stock crushed 70% over the last 3 years. I actually look at PayPal stock now and I actually think it has the potential to outperform the broader US indices over the coming years. I broadly like PayPal at this point. I think it has some very real risks, very real challenges that we'll talk about in this video. But I think at this point, the valuation is starting to include a lot of it to the point that it looks pretty cheap. And we'll talk about this in this video. If you enjoy educational investment videos, please make a point of hitting that thumbs up, hit that subscribe button. You're watching Unrivaled Investing. So let's talk about the latest news with PayPal. You have a new CEO, Alex Chris, who's coming in from Intuit, previously 19 years at Intuit, previously running a division that represented more than half of their revenue. He was an EVP, and he led their transformative acquisition of MailChimp for $12 billion. I have some mixed thoughts on that because MailChimp looked to be a very expensive acquisition, around 15 times sales at least. And so the plus side is that this is a CEO now that would feel comfortable doing a transformative acquisition with PayPal, and they have the balance sheet and free cash flow to do it. So if he does something that Wall Street approves of, then you can see the stock, jump higher. But there's also the risk that they overreach, and paying for things in 2021, oftentimes meant that you were overpaying. And so, it is another aspect of, well, could he overpay and do something dumb with PayPal's balance sheet? So you're going to want to watch that carefully. He is inheriting a company with a lot of real assets, 400 million active consumer accounts, 35 million active merchant accounts. I mean, this is a real special business because it has a two-sided network. You have the consumers, the digital wallets, and you have the payment gateway effectively for tens of millions of merchants, and ultimately a brand, several brands, PayPal, Braintree, Venmo, that merchants and people trust. They also have a very fast-growing buy now, pay later business that is scaled up, to $20 billion of buy now, pay later payment volume. That's up 160% from 2021. And they have a deal with KKR where they're going to be offloading effectively the balance sheet risk and freeing up a couple $1 billion of cash, around $2 billion of proceeds later this year, with KKR taking sort of the origination risk. That said, while you do have this double-sided network advantage, I would say their business is under attack. You are seeing real challenges to their moats. For example, you are seeing Apple rapidly grow their digital wallet. More and more consumers saying, hey, I'm very happy to use Apple Pay. And you're also seeing merchants increasingly consider other options, such as Shopify Pay, Adyen, and other Stripe, and other payment gateways that are rapidly taking share and offering lower fees for merchants. So this is a two-pronged attack that PayPal is facing, and you can see it with their numbers. You can see their active accounts, using PayPal have actually declined over several quarters. You can see that their take rates, the amount that they can charge, that's also coming under pressure. And you can see that their margins have also been coming under pressure. So these things reflect the very real competitive threats that the business has been facing and will continue to face in the years ahead. These competitors are not going anywhere. The question is, can PayPal successfully navigate these competitive pressures? And it's going to require lower margins in the future, lower take rates in order to survive these competitive threats. The most recent quarter reflected that they are starting to handle it better than they were previously, looking at around 7-8% growth and improving profitability. A lot of this profitability, you might go, wow, look at this huge increase in profitability. You do need to parse it with the fact that a lot of it comes from managing their expenses, pulling back on their expenses significantly. I do think that this is going to be a source for them to get greater margin expansion in the coming quarters, partly from things like artificial intelligence, where you can have better customer support because you have a super well-trained AI, and that could be a cost reduction initiative for the company in the quarters ahead. And so I think you're even seeing that now, customer support and operations, in terms of as a percentage of cost dropping by 12% year over year. And so I think you're going to see similar initiatives with their general and administrative expenses. But broadly, looking at a business that's facing lower margins because of tougher competitive pressures. So where does PayPal go from here? First of all, in full disclosure, this is not financial advice. And also, this past week, I bought a stock that I think has over 500% upside potential. If you're looking to take charge of your investment journey with compelling ideas, market insights, and an exclusive Discord community available for annual subscribers, come check out unrivaledinvesting.com. And so looking at PayPal, I mean, it's pretty much a thought exercise here. you have a business generating around $5 billion in free cash flow that has lost market share over the last few years. What is that worth? And so I would, if I were considering investing in PayPal, and if you're an investor in PayPal, I would write down a business generating $5 billion. Maybe it's really $4 billion if you adjust for significant stock-based compensation. But let's say it's $5 billion that they have each year. How much is this business worth? Recognizing that they're facing intense competitive pressures, they're not taking market share. So maybe they're only going to grow, let's say 5 to 10% in the years ahead, maybe. What's that business worth? And for a business generating $5 billion in free cash flow, I personally prefer to find businesses that are taking market share. That's how I personally want to align my portfolio, but every investment journey is different. Some people put a greater weighting on what the valuation is and the free cash flow. So it's important to recognize what type of investor you are. So if you're saying, hey, I'm not putting as much weighting on whether or not they're winning market share, losing market share, just think about that $5 billion in free cash flow and maybe they're able to grow at mid-single digits over time, maybe even high single digits over time. Maybe you could say, hey, I think that should be worth $100 billion. And for a business that's currently worth $65 billion, maybe that suggests that, there's significant upside right now. And so using my hypothetical valuation framework, and of course the stock price can go way higher, way lower, depending on how they execute, depending on sentiment. But penciling out something like 5 to 10% annual growth over the next 5 years, penciling out a wide range of end valuations from 15 to 25 times earnings, and assuming margins either stay flat around 15% where they were the most recent quarter to improve to around 20%. I actually think with real and solid execution, maybe it could get better. But assuming a range of 15 to 20% over time, you're talking about a stock that either returns, and keep in mind, this is a hypothetical framework, either high single digits over the next 5 years to a range of possibly, 30% annualized. Partly given the fact that they have so much free cash flow that they're returning to shareholders, that is going to drive a key part of the thesis. So I look at this, I broadly like it. A few key points to consider taking away, from this video. First key point, I think that PayPal, you have to figure out what type of investment journey you want to have. Do you want to own the guys and gals, the businesses that are taking market share? Or do you want to own the companies that might be cheaper but have lots of free cash flow? Maybe aren't the winners. Maybe aren't the winners in terms of, they're going to be much, much bigger in the future. So you need to figure that out for your own investment journey. I think looking at this type of company, I think the valuation has gotten so penalized that it's including a lot of these risks at this point. And I do think it has the potential to outperform the broader US indices over the years ahead, especially because you have new management coming in. And this gets to the second point. If new management, comes in and just starts whiffing it, making big mistakes, and it's his incentive not to, that would be a huge pie on his face. I think you could start getting activists involved, really aggressive activist campaigns, either sell the company, break up the company. I definitely think, you could see some sort of push from Wall Street. I mean, this is just red meat for Wall Street to get involved. This type of setup, when you have the change up in management, you have a stock that's so beaten up, you have other players that are clearly taking share. So you're going to want to make sure you have management that knows what they're doing. You're going to see aggressive investors start nipping and start putting, headlines, writing nasty letters if the stock doesn't start turning around. And maybe that means an aggressive buyback. Maybe that means leveraging their balance sheet for a buyback. Maybe that means a transformative acquisition. So those are the dynamics that I like about this that could cause the stock to rip dramatically higher, combined with the fact that it has this free cash flow. Even if they're not going to be the winner in terms of winning the market from either consumer or merchant perspective, I look at them and I think, you know what? The valuation has gotten so beat up. That's why I think at this point it could outperform. It has that potential to outperform. A big thank you to Umberto, a member of the Unrivaled Nation, who commissioned this video. Is a member, once again, of Unrivaled Investing. You can check that out yourself. And so overall, I look at PayPal. I like it. I like the setup here, and I'd love to hear your comments below. If you enjoyed this video, please make a point of hitting that thumbs up, hit that subscribe button.